Picture this. One of India's biggest private bank tells the stock exchanges it found a problem in its books. One small word, discrepancy. By the time that dust settles, that word costs two top executives their job, freezes their trading accounts on insider trading charges, and triggers a formal fraud investigation. This is the inside story of a hole in the balance sheet stayed hidden for a decade until it didn't. It starts on March 2025. IndusInd Bank tells investors it has found discrepancies in its derivative portfolio. Trades the bank had taken against itself internally mismarked in a way that manufactured profits that were never real. The initial estimate, a hit worth around 2.35% of the bank's net worth. The stock drops hard. The board moves fast. On paper, PwC is bought in to size the damage. Crane is bought in for something bigger, a root cause forensic audit stretching back 9 years from financial year 2016 to financial year 2024. That time frame alone is the first red flag. This isn't a quarter's mistake. Someone is asking, how far back does this go? By mid-April, the numbers firms up 1,979 crore rupees. On April the 26th, Grant Thornton's final report lands on the board's desk, 1,960 crore rupees of cumulative damage. And it isn't just derivatives, 674 crore rupees wrongly booked as microfinance income, 590 crore sitting in the books as unexplained assets, 172 crore rupees misclassified as free income, 4 separate leaks, 1 balance sheet. Here is where the story turns from an accounting error into something else entirely. According to the bank's own former chief financial officer, the person who first raised the alarm, these discrepancies don't start in 2025, they start in 2015, a full decade earlier. And according to his account, it wasn't just him who knew. He says the board at that time, senior management and the bank's former finance head were aware about the numbers didn't add up. Then comes the detail that changes everything. An interim order from SEBI dated May the 27th, 2025 states that the bank's management knew about the discrepancy 15 months before they told this to the public. 15 months of silence. And in that window, regulators allege the then CEO and deputy CEO sold shares in the bank while sitting on information the market didn't have. SEBI barred them and several other executives from trading. To be clear, these are allegations under active investigation, not a proven verdict. But the pattern is the one every market thriller is built on. Information asymmetry used before it was shared. And it didn't end there. As recently as June 2026, fresh complaints of insider trading and governance lapses surfaced, adding to the scrutiny the bank is already under. By November 2025, both executives are out. The bank brings in a new CEO, Rajiv Anand, to rebuild what's left. His first quarter in charge, the bank posted a net loss. Its loan book and its deposit bases both shrinking as customers and counterparties wait to see how deep this goes. Then the story escalates again on December the 23rd, 2025. The Ministry of Corporate Affairs orders India's Serious Fraud Investigation Office, the SFIO, to open a formal probe under Section 212 of the Companies Act. This is no longer just a SEBI matter or an internal audit, it's a criminal investigation. Around the same time, Mumbai Police Economic Offence Wing starts taking statements from the former CEO and former CFO, the former deputy CEO of the company, and 6 to 7 other bank employees as well. As of now, investigations say they have found no evidence that money actually left the bank, no diversions of funds. What they are chasing instead is accountability. Who knew? Who stayed quiet? Who signed off on numbers they shouldn't have? The SFIO probe is still open. Nobody has been convicted of anything. But for one of India's largest private banks, the question on the table is the one auditors were reportedly asked back in 2025. Was this an error or was it something else? Here is what makes this story worth remembering. Beyond the headline number, a bank's derivative desk is one of the least visible part of its balance sheet. Most retail investors never look past the deposit and loan numbers. But it's exactly the kind of place where a small technical mismatch can compound quietly for years before anyone outside the building notices. If there is one number to take away, it's not the 1,960 crore rupees. It's 15 months between when the people running the bank allegedly knew and when the people who owned its shares were told. In markets, that gap is everything. We'll be tracking this one as the SFIO probe moves forward. If you want the next update the moment it drops, that's what the subscribe button is for. Please subscribe to Analyzed. Every number has a story.